Hey folks, my guest today is Adam Robinson. He's building a very cool tool called Get Emails. And he started this after spending 10 years on Wall Street trading credit default swaps at Lehman Brothers and started his first startup called Robly Email Marketing. The company was bootstrapped, ranked number one in customer satisfaction in 2017. And the company distributed mid seven figures and was sold for eight figures. His current venture, Get Emails, helps e-commerce and publishing customers identify their anonymous web traffic and retarget them over email. He launched the company in November 2019. And just crossed, I'm going to let him tell the revenue number. Adam, ready to take us to the top?
Yeah, sure. Ready to take us to the top.
How are you doing? Okay, what's the revenue number?
I'm great. 4 million ARR.
That's great. Okay, and
six full-time employees, bootstrapped, 50% total margin.
That's incredible.
18 months old.
Wow, 18. Okay, got it. So talk me through the starter story. How did you get your first 100 customers?
So I had, as you read in the bio, I had an email marketing company that I started called Robly Email Marketing. That's a very difficult space, incredibly challenging, but we had a really nice lifestyle business. And in attempting to niche, I discovered this identity resolution space, which is like basically identifying anonymous web traffic. And then without the person actually filling out a form, we'll pass you a plain text email address, add it to your list so you can market to them. And whereas you would get like 3 to 5% of people to fill out a form, we'll get you 40% of your traffic. So just an unbelievable email list growth tool. It was a feature in Robly. Everybody loved the feature. Nobody was actually switching to the platform. So we thought, hey, if they're like downloading these files and uploading them in their email marketing app, and they're enduring that horrible experience and like give us a 10 out of 10 on the NPS report, we need to spin this out, connect it to everything, and launch the product on its own.
So ask me a plain text email. So I've used tools like this
before. It is magic. That's how.
let me just ask the question, because I think my audience will ask the same exact thing, which is there's tons of tools like this out there. The issue I always have is you get a massive list of company names based off IP addresses. It'll say, someone from SendGrid was on your site for 20 minutes, but I don't know what the hell to do with that. You're saying
we give you the person.
You'll give me the email of the person who was on the site?
Yeah. So we connect anonymous digital identifiers that are used in the advertising network to rich customer profiles. Mm-hmm. And like lead forensics, for instance, does what you're talking about. But we go a step farther. It's primarily a B2C tool because all the emails are like Gmail, Hotmail, Yahoo, and stuff like that. But we actually give you the person.
Can this work for B2B?
It can. We have some B2B customers, but like we're having so much success in the B2C world, we're just not focused on it. Mm-hmm. You know what I mean?
Mm-hmm. All right. So launched in late 2018, it sounds like.
2019.
Okay. Scaled nicely. So first 100 customers came from your last company, which is great. How many customers are you adding per month these days?
So this is kind of like a tale of two businesses. There was what we did to get it off the ground, and there's what we're doing now. So I would characterize the first year as the Facebook year. My wife and I did these like outrageous and funny Facebook selfie videos, and they were like the ads were paying back in a day. They were giving us unbelievable reach. It was working incredibly well. But 9 months in, we're like, this is the wrong type of customer. Churns through the roof. Even though it was quick payback and allowed us to grow really quickly, we noticed that our top 10 customers had huge revenue expansion. They were paying us between $5,000 and $30,000 a month. We need to focus everything on them. So end of the year last year, beginning of the year this year, we did a pivot, stopped running ads. It's entirely an outbound sales model. And we're bringing on people between $2,000 and $10,000 a month now. That is just a totally different, like the number of customers that we're adding is much lower, but like we added 50K MRR in the last 30 days. You know what I mean?
And across how many customers?
I would say probably, 25 to 50. Whereas if you did 50K a year ago, it would have been like 500 or something like that. You know what I mean?
Pay a new MRR or ARR?
MRR.
MRR. Got it. Okay. Mm-hmm. So good growth. So just to be clear, absolutely no dollars on ads right now.
$0 on ads.
Well, what does the sales team look like if you're doing outbound? Is there a salesperson or what?
There is one salesperson and one person assisting that salesperson. She's doing entirely cold email. The quote is kind of like bring in as much as you can. But it's one salesperson who brought in 50K MRR last month, so she's doing pretty well.
Is she? I mean, the reason I'm asking here is because this is like a pivotal moment for a lot of SaaS companies. Is the comp that you put on your first sales rep?
Say that again. Sorry, I didn't.
This is a pivotal moment in many SaaS companies. Is when to bring on your first outside sales hire and what quota, how to incentivize them. So
yeah, she's been there since day one, and she has a sort of co-founder incentive structure. She's got like shadow equity that her equity percentage grows with our ARR. So like she just got her equity doubled when we crossed 4 million ARR. You know, that would never work for a sales team, but my attitude is keep this thing as small as possible. And I actually want to like sell it to a private equity or something that will actually scale the team like at the end of the year.
So how much equity do you currently still own of the business?
We have the same cap structure as the last company because it was a spin out of the last company.
Oh,
if that makes sense. And the last company, I had two co-founders. I own 42% of the last company and I own 42% of this one.
Got it. And does your wife own any here too?
My wife does not own any equity. She was just a significant contributor to the ad campaign.
Interesting. Oh, got it. Not a co-founder. Okay, cool.
Yeah, not a co-founder. I mean, I started the first company like 5 years before I met her.
Got it. Okay. Mm-hmm. And what's so the other two co-founders own the other sort of 60-ish% or
yeah, where? Exactly. Bootstrapped, okay. No investors.
Okay, interesting. And so, but I'm asking, there was no investors at the old company either?
Nope, no investors.
Why didn't you buy them out? I mean, why take them into the new business?
Man, that's too long of a story for this podcast, but it was just, one of them's my brother, one of them's my best friend. There were several ways to handle this, and I just thought, just rewinding a little bit, I sort of experimented with growth tactics for like 3 years with the other company's money as it was doing fine. It's a great lifestyle business. Something finally works, right? If I'm the investor in the old company, I say, you just spent my money for 3 years trying to figure this out. So, it's my asset.
Yeah.
That's kind of the conclusion I came to. And it's really hard to buy somebody out when you're like so excited about the future prospects of this thing. Like, what would you sell? We did like 50K MRR in like the first 6 weeks. What would you have sold that equity for?
Well, just hold on. Going back to the co-founder story, Adam, I mean, are they working currently as hard as you are in the company?
One of them is not.
So like the one that's not, like that's the argument of why you would reshuffle the cap table.
Hey,
thing, right?
I hear you. There was one other sort of tricky moment in like 2015 or 16. And I think maybe if that tricky moment hadn't happened, I would have been more assertive about it. But, but with this one, my plan the entire time was to sort of grow it really fast and exit fairly quickly. So that also is just, if I was in this for like 10 years, I 100% would push for that.
How many customers today paying?
750 paying customers.
750. Okay, cool. And then talk to me about churn.
So churn is a really hard thing to talk about because I explained that Facebook ad strategy, and the people we were bringing on last year probably had an average of 10,000 unique monthly visitors, whereas everybody we're bringing on now has 300 to 500,000. Totally different customer profile. I told you about our top 10 in churn. So looking at it by segments, our top 25 has been around for 75% has been around for over a year. All the top 10 is huge expansion revenue, but like the bottom churn, the top line churn number just like doesn't even mean anything because it's the old people still churning off.
Listen, the whole magazine issue last month was focused on logo churn doesn't mean anything, but it doesn't mean anything for the exact reason you just articulated. And that's why we use revenue churn, which accounts for large contracts that are super sticky and expanding. So what does your revenue churn look like over the past 12 months?
It looks great. I mean, I'm not going to give an exact number, but it's single digits.
Okay. Single digits monthly or annually?
Monthly.
Okay. Got it. So under 10% revenue churn per month. Now, does the expansion revenue driving the same cohorts make up for the churn? Is your net revenue retention above 100%?
Yes.
Okay. Got it. How far above 100% do you even drive that with your big expansion accounts?
I mean, we just kind of started a few months ago, really focusing on these guys. So all these questions are super hard when you're really early in a company. You know what I mean?
Adam, that's not an excuse.
You're doing.
You're not. That's not. No, I'm not going to buy that because you're trying to grow and exit to private equity firm. They're going to be way tougher than I am on all these questions. So I just don't buy. I don't buy that at all. What's happening is you're growing so fast, it's not worth your time to focus on it right now. You just know it's working.
You just gave me my answer to those guys.
Yeah, but by the way, like, you're gonna have to polish all this up, right? If you end up running the process. But really, there's people listening right now that are gonna go, yeah, I'm like Adam. We're growing so fast. I'm not losing money. We're profitable. I know it's working. Even if churn's high, I know it's working. So I'm gonna keep going.
Right. Yeah.
That all makes good sense. That makes good sense. Talk to me about, so grow fast and then exit. I mean, what would you value the company at today?
I mean, I don't know. What's a 4 million ARR company growing at 15% a month, the 50% total margin and 6 full-time employees worth?
Well, that's the science, but a sale is never about science. It's always an art. And it comes down to when you go home at night and you have to tell your wife you turned down an X size offer. How big does it have to be before she says, I can't believe you did that, I'm leaving?
I mean, are you asking my opinion or what I'd sell for?
I'm asking how you personally would value the business.
I think that this thing would make sense to certain buyers. You know, I think 25 on the low side.
Mm-hmm.
I think a good price for it's probably 50.
Mm-hmm.
If I double revenues before the end of the year, like maybe a little bit above that, and I think that I will.
Interesting. And so
what's your opinion? I mean, you're the person who talks to 100 people a day about this stuff.
The most valuable thing I've heard from you so far is what the top 20% of accounts look like and what the expansion pattern looks like. You're going to get
because that's all we're doing now, you know?
Yeah. I mean, again, I don't know what the breakdown is, right? But what I can tell you is the companies right now that are getting the highest valuations, they all have net dollar retention above 150%. Right. So like, that's one of the key, that plus just overall growth rate are really the key drivers I'm seeing today of SaaS valuations. You know, the closest comp that I put you guys to would probably be Lemlist and Guillaume. Very similar space. You know,
what's the name?
Lemlist. Yeah. I mean, he just, they're 3 co-founders. They're very how much are you profiting on the 4 million?
50% total margin. So a couple bucks.
Last month you did about how much top line?
Like 300 grand. Dropped to
150 to the bottom of the bank. Yeah. What do you do with that currently? Do you pay it out as dividends?
Yep.
Interesting. And can you explain to me how, like, is it just to the founders, or do the 6 employees get to take a little part participation there?
As I explained, our employees have a little shadow equity sort of portion of it.
Does that correlate to dividend checks every month or no?
Yeah. They get dividend checks.
How does that work? Founders ask me all the time that are bootstrapped. How do we get our employees incentivized without giving up a big chunk of equity and they do dividend?
Well, I love this shadow equity. At the end of every month, if you have 1% shadow equity, I just write them a check for 1%. It comes out of the next month's expenses, if that makes sense.
1% of what, though?
Of the whatever the total distribution was going to be.
Okay, and is the total distribution, so if you did 300 grand last month and 150 goes to the bottom line, will you distribute 100% of the 150?
Yeah.
Okay, got it. So that
like I have a target bank account amount that I like running for the size company we are. Let's say it's 250 grand, right? So like we built up to that point, and then now it's a 1-to-1 with the cash flow we generate.
Why is your bank cushion number 250? How'd you come up with that?
I have no idea, honestly.
Yes, you do. It's emotional.
Yeah, I just didn't. That seemed like a number that, like, no matter what we wanted to do, it was going to be enough to gas it if we wanted to. I was never going to get in trouble. Does that seem high to you for like a tiny company like this?
And no, what are your total monthly expenses are 150 grand?
Yeah, about.
All right, so you have.
It's like 6 weeks of expense. But it's a SaaS business, so it's not going to go away. I don't know. It's you could probably run it with a lot less. You might run it with a lot more.
The rule is just take your fixed expenses, multiply times 6 months. I don't know what your fixed expenses are.
Yeah, not a lot.
Yeah, the employees obviously are in there, and
exactly
fixed, right? Hosting, servers, etc.
Yeah, so it's probably right around there.
Yeah, interesting. I think a company, and exactly 1 year ago, what was revenue?
We've grown 250% since a year ago. So it's probably like 50 grand, 75 grand. I don't know.
Yeah. You were like a 1.5 million run rate about a year ago.
Yeah, exactly.
Yeah. I think this is great growth. Congratulations. This is also a space where I mean, again, there's a ton of churn. So the fact that you've sort of figured out how to get that above 100% net dollar wise is pretty impressive. Cool. Okay, got it. 6 people on the team total, 1 salesperson. How many engineers?
1 engineer.
1 engineer. How do you build this whole thing with 1 engineer? Did you use an outsourced dev shop or something?
No, he's a total savant. Actually, we have 2 engineers. We have one guy who builds integrations full time, but doesn't touch the code. And the CTO is my co-founder, and he's just like a super genius.
Where did you find a person that just does integrations full time?
Through my other company, we hired somebody. I actually built a development team in Argentina for my first startup when I wanted to pull everybody off to work on this one.
Wow.
And the guy we hired down there to manage them knew this other guy.
Did you use a firm to spin up that team in Argentina, or did you just know someone on the ground?
That was incredibly difficult.
Yeah.
I lived down there for a year, and then it still didn't work until I figured I had to like hire someone to manage the entire team. It was just, if anybody wants to email me, adam@getemails.com, I'm happy to jump on a call about this. It is a bear.
All right. Last thing before we wrap up, what's your fully weighted CAC, including salesperson commission, to get a new, call it $500 a month customer?
I mean, so we added 50K MRR last month, and we have 2 salespeople. So
what commission do you pay?
Well, I don't pay them commission. I pay them based off MRR. They're sort of, you know what I mean? Like, she's a basically co-founder sort of level employee, and her commission grows as revenue grows. And she's like the sole driver of growth right now, because she's the only one adding it. Does that make sense?
Shadow equity structure.
Exactly. Yeah. So
you don't really have a good idea of what CAC is.
No, we haven't even thought about it.
You've made it purely variable.
Yeah, and that would have to change if I were the one building out a Salesforce under her. But my whole plan is to let somebody else do that.
Yeah, you don't want to do that. So, I mean, do you think if someone came to you, with a lot of buyers that listen to this podcast, they come and offer you something around, I don't know, 15, 20 $million all cash up front. Do you sell the business?
Probably not for 15 or 20. I just think it's growing so fast that there's somebody out there who likes it for more than that.
Mm-hmm. Interesting. Okay, very good. Let's wrap up with the famous 5. Number 1, favorite business book.
4 Steps to the Epiphany.
Number 2, is there a CEO you're following or studying?
I share an office with Dave Rogenmoser from Proof, and those guys are doing some unbelievable stuff right now.
Oh, are you down here in Austin?
Yeah.
Oh, amazing.
Get a coffee sometime.
I'm like 5 minutes from you. I love that. All right. Are you going to take over their office or no?
No, I'm just, I'm just hanging out in there every day.
Got it. Well, I know they were trying to sublet a part of it, but then they bought another kind of headliner.
Then they started this thing called Jarvis, and they're Conversion AI, and they're not looking to do anything anymore. They're absolutely crushing it with that thing.
Awesome.
He needs to get on here and talk about it because it's phenomenal. It's just like the story of that is unreal.
All right. Number 3, what's your favorite online tool for building a business besides your own?
Intercom.
Number 4, how many hours of sleep do you get every night?
7-ish.
You know these. You listen to the show, don't you?
I do. I'm like a fangirl.
Is it what you expected, sort of being on it versus listening?
Yes.
Good.
Yes.
I like that. I think that's a compliment. So that's good.
All right. It was exactly what I expected.
Good. No, and you still feel good about it, right?
I do. I'm glad I did it. Especially because I'm very upfront with what I'm trying to do at the end of the year, which is this thing. So
look. A lot of people will say, like, you read all these negotiation books, they say you have to be approached and to do. I'll tell you what. If you put out there that you want to sell and you can create a bidding war, that is how you get irrational offers. So, like, I'm all for sort of saying we're accepting term sheets on August 1st. Mm-hmm. Give us indicative terms to open up data room 1 on August 15th, and we're picking a term sheet to sign by August 30th. Let's rock and roll.
Drumming up demand, baby. Let's go. If you have any other ideas for how I might sort of further drum up demand, I would love to.
Look, I'd love to take it to market for you. I mean, I have plenty of buyers I think could, I don't know. I mean, look, I have to put some feelers out, but I think getting, sounds like 15 was too low. 20 is more interesting, but 25, especially on clean terms, starts to get really interesting at your current run rate. Obviously, be more if you grew.
Yeah, I think you're probably in the right zip code. And I was, my whole idea was like, get it to the end of the year, be doing 6.5 or 7, because we got a couple other growth things that are going to crush it. And then that number's higher,
That's great. What's your situation? Married? Well, we know you're married. Single, kiddos?
I'm married. No kiddos. Working on it.
Okay. Oh, nice. Exciting. How old are you?
I'm 40.
40. Last question, Adam. What do you wish you knew when you were 20?
skip Wall Street and learn how to build software, dude. Quit messing around.
Big statement. There's a lot of very rich people that love Wall Street.
No, I know, but this is just more satisfying to me, to be honest.
And like, it's totally TM. I mean, when you think about right now in SaaS, it's so hot. Every dollar of MRR you add to your business is effectively worth $60 in equity because you multiply times 12 to annualize it, and a minimum 5x multiple. It's an ATM. You put $1 in, you get 60 out. It's crazy.
Hey, let's do this.
Let's do it. Guys, there you have it. Adam, getemails.com did $1.5 million run rate last year, have grown to about $4 million in terms of run rate. Now they do $300,000-ish in top line revenue per month, profit $150,000 at the bottom line every month. They pay out dividends to their team. Only 6 people, high revenue per employee, which we love. 750 customers, helping you understand those anonymous website visits, but not just telling you what company that visit is from, but actually giving you the email so you can follow up and take action on it. Adam, thanks for taking us to the top.
Thanks, Nathan. It's fun.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.